in with conviction and then hit high liquidity. Take some off, manage the trade, manage your risk. Now, what we got here is a pullback too, and you can also cover that in a pullback strategy. Okay, so we've been covering the flags, etc., and here it is in front of us yet again. Okay, strong move, kind of pullback, strong move. All right, so let's take a look at it. Here's our strong move, and then let's look at a measured move in here. Okay, now look what it did. Okay, so it did do a measured move. It did a 50% measured move. Well, 50% from the drop from the bottom here. Okay, but a real nice measured move here. Okay, pretty close, pretty close. So I mean, this pattern did its job, right? So look for these patterns in here in the order flow. These are very the concept is really simple. Everything about it is very simple. You're looking for a strong move, a small pullback on low volume. Look at the volume in here compared to the strong move. Look at the strong consistent move here of the selling, and it went from 62.5 all the way down to 56. Okay, so let's just say 62. So it went 6 points. That's a strong move in the S&P. And then a pullback here is about half that. Back to this kind of little area in here that we're looking for our first pullback. Now it could have done this. It could have done a little lightning bolt pattern in here. It could have done a strong move, then your ABC pattern, A B C up into here, and then fail. Okay, but it didn't. Or maybe it did on a smaller time frame. It probably did. I mean, this pattern, yeah, it did. And in fact, this pattern just reoccurs so many times. Here's your flag pattern to the upside, right? Here it is again to the downside in here as well. So now, this isn't much to hang your hat on. It's not really that strong a buying. And then even though you see nothing but buyers in here for the most part, it's not that strong either. Sellers are in control, right? That's why we covered the webinar last Friday. Or God, I mean, so many times over. Who's in control in these moves? Okay, then we're looking for pullbacks. All right, that's it. Really simple. So let's read the order flow and let's look at these areas in here. Okay, so yep, strong move, our flag pattern, and we saw multiple flags in here. Okay, and here we are again back down here. Let's see if we can get our sellers, drop it down to 51. Okay, now there's something about this one. That's the move we're looking for, we have to be a little careful after this kind of easier move has taken place. Watch for something kind of, or be aware of something kind of tricky. These are a little bit harder now, I think, in my opinion. We're going with the trend, but you'll see these kinds of dupes down below here, and then watch these guys run it and hit some stops and come up to 60 up above the swing right here and knock everybody out. All right, so we want to be aware of that, or maybe they just knock them out here or here. All right, so just a smaller pullback, and then looking for more selling, and then the continuation into 50 and 51 and 50. All right, so anyway, different on this third leg in here. We're aware of what might unfold here in the order flow. Okay, so again, one of the ways to counter that is to manage your risk in your trade management. Okay, so one of the ways to do that is if you're looking for that, you see those sellers come in, take it to the bottom of the range, take some profits, put your stop at break even or overall break even, as we discussed yesterday. All right, and overall break even, for those of you in today, let me just go through it. Your overall break even would be something like this. Okay, hold on. Since you took some, let's see here. That's incorrect. Let's get rid of that one. All right. So since you probably, let's say you got in somewhere around in here, right? Okay, and you took some off down here. Now your overall break even is up here, okay? Because you took some off, you took some profit there, right? So you may or may not have gotten stopped out here on this one, but you took some off, right? And then, well, I'm sorry, you took some off and then you got stopped out at the overall break even. Okay, so you didn't lose any money on it. You managed your risk properly due to the order flow patterns in here. Okay, so just some considerations. Now, you know, look for the next one. Just move on from it. Look for the next one. It's already setting up right here, and I can't speak fast enough, right? Or if you're still in this, maybe you got in a little bit better. Maybe you didn't get stopped out up here. You're still in it. Take some profit now, some partial profit. Now, these are not trade recommendations. It's just about managing your risk is what we're talking about. Okay, you can look, and now let's just zoom out, look at the bigger trend. Who's in control? Okay, well, this is kind of tough to read. Strong selling, pretty strong buying, moving it right back. And then we talked about this cluster of buying up here that maybe it can bounce off of here and continue on up. What we found and said was, when we talked about it, right? We talked about the sellers down below this line here. Here was the first one. It was be very careful, pull back. Once we start to see this, now it's looking pretty good. We can get in and take it down. All right, and then you know, you're just managing your trade at that point. All right, guys. Anyway, we're going over a lot of different trade management techniques and things in here, but what I want to definitely relate it back to what we've been talking about in some of the previous webinars. Go back and watch them. I'll show you where they are. I think you might find them helpful. So if you go here to our YouTube channel and scroll down, and they're right here. So here, learn how to spot icebergs and stop runs in here, and it was also on trade management yesterday. This is yesterday's. Okay, this one here is from Friday, trading order flow flag patterns and risk management. And then then we had Scott Pulcini, and he talked about the grains, etc. All sorts of things in here. But then we talked about live order flow analysis with setups and strategies. I didn't get to the title on that one, but anyway, I'm sure we talked about market structure and who's in control in some of these areas. So, and then let's just go back another one here. Here, catching a reversal pattern, building a trading plan, spotting order flow reversals versus trending moves. You know, ES, NQ, CL trade setups. Anyway, go through some of these in here, and this can build out your trading plan. Okay, now we're talking about some pretty simple patterns in here, and we started with one pattern in particular, and that was who's in control in an area. And then we can see it in here. We know the sellers are in control in this time frame here, right? We saw the double top here. We didn't get much buying up here. We saw the selling coming in. Now we know who's in control. Okay, in fact, the control really started up here. Okay, but this is so visual in here, and it's a good one. And then it was tested here by these buyers. Now these buyers are on the hook here. Okay, this is another thing we talked about yesterday with stop runs. We're gonna see stop runs down here because of this buying in here got it wrong. Okay, look at the icebergs in here too. Now this coincides really nicely. We talked about this yesterday as well. So let's just back up. Who's in control? Sellers. On this move back up, and we talked about the double top as well. And then in this move, sellers. The move back up, and then the icebergs in here. We have a confluence. We have a stop run and iceberg. So a lot of people getting stopped out. A lot of icebergs were larger traders. We can see them right here, right? So this is an aggregate, but we see almost 2,700 here, and then, you know, over 700 here. That's a lot. 3,400. 3,500, and then we can now include that with our other analysis. This is not a signal here. It is a confluence. Okay, we're looking at the order flow. We're noticing that this is potentially trap volume. We know that the buying came in here, and we're looking for the bounce either, or the dupe below it and the continuation, or sellers to come in. So the first knee-jerk reaction is like, oh, it's going short, go short, right? Be very, very careful on this move. It hasn't followed through yet. We got the pullback, and we saw the sellers starting to come in here. It looks like it's going to follow through. More likely, it's going to follow through here, okay, because there's more selling coming in and looking for taking it down to some of these areas in here. All right, and then we get our pullback. So if you can even let that one fly and then get back in on your pullback. So many different ways to trade. If you're a really aggressive trader, you're selling up in here, you're taking some off here, you're getting back in here, you're looking for the follow through, taking some back down here, looking for a pullback here, and getting back in again, right? Looking for follow through, right? So this has played out pretty nicely. Okay, so we're even down, way down below. God, I can't stand missing the trending move. Anyway, we're looking for 51 and 50. That not only played out, it blazed through it, pulled back, and already has done another leg. Guys, another measured move, another flag pattern in here. Okay, so let's take a look. Beautiful. And let's measure it as well. Well, pretty spot on. All right, now there's reasons for this. It's not just, you know, a math. This is not some sort of math equation in here. I need to re-emphasize this so much. It's so important to understand these moves and what makes up the market here. It is all from the microstructure, okay, the market mechanics that makes this whole operation work here. It is how the market works, and it's just plain and simple. Now there's all sorts of things, devious things or simple things or complex things going on in the market. There's so many different players, especially in the S&P E-mini, especially. But the same concepts will hold through in all of them. Look at the pullbacks in here to back into where it dropped from in here. Same ideas. Okay, so now here's a double bottom here. Look at some selling, look at strong buying. Okay, all right, buyers. Now, if you can pull that off, then you should be able to come right back up to 40, 45 or 46 right here. Okay, so let's see if we get a flag pattern there. Okay, back up to here, just back up to here. Okay, so here's our strong move, buying, pull back, and not getting it. Okay, so let's see if we get continuation or if we're going to get another buy barrage in here. Not seeing this pattern whatsoever right now. Right in here is where we'd be looking for it, and we'd be looking for the buyers back up above this little area right here. See this nook? Okay, see that here's you know, strong move, pull back, strong move. Here is where we want to see buyers back up here. We got some, okay, up in here, not much. Okay, and this is where we've got to see them up here at this 43.5 for this to go higher. Now, what else we're looking for in the order flow in here for that to work? Okay, we want this bid to be strong. We don't want to see them on the offer in these areas in here. We want to see them disappear. We want it to be easy for buyers to lift it up into these areas here. All right, let's see what we got here. So we got a continuation. Right, so this is a pullback. It looked like it potentially could be a double bottom pattern. Again, it's the order flow within the pattern here that makes it up. Now, there's one thing in here, and I wanted to mention it before I got into it, but I didn't. But look at the selling here. Okay, we saw a pattern last week where there was heavy selling on this first leg. Lots of nice buying in here, and then retest down here, and we saw just a little leg, and there was no selling on it at all. In fact, there was, I mean, so little selling down here. It was all blank in here, and then we saw buyers here, right? I think we even saw buyers down at the bottom here. That's a good pattern, right? It means on this retest there is no selling interest, and it was a higher low, in fact, as well, by a tick or two, not by much, but that makes a difference. All right, so these are the things we're looking for in this order flow in here. We're like, well, okay, that's some pretty strong buying, but there's some selling still in here. All right, so look for these things, look for the caveat. It also, did it make a lower low? Not really. It made an equal low. All right, so these are some of the things that we're looking for in the order flow. Okay, not just the dots in here, but also the order book, okay, the heat map. All sorts of icebergs in here, so I'm going to have to kind of readdress this. Now look at the iceberg here on the bid. Interesting to see. Okay, we're still in a downtrend. Even up here, we did not make a higher high. So we're still sell side here until we see something different. And that's another thing to look for in our little pattern there in here, right? We see that strong buying coming in, and all it did was come up to here. Okay, we're looking for a pullback and an extension back up to the top of the range. It didn't come close to it. And we didn't get the buyers in here either, and we had selling in here. So basically, it's illustrating like pretty well, I think, that yeah, we're not really. I mean, it may happen here, but we're not really looking for it. We're looking for high probability. Okay? So in the order flow, and the order flow should tell us. Okay, again, look at selling in here. Look at exhaustion here, or not much buying here. Okay, we do have icebergs though. We do have the bid. Okay, still looking for sellers though to try to break this in 38 and 37 here. All right, now the opposite scenario though is up here, right here, around this let's just call it 41.5. This is where if we get pretty strong buying up here, here we go. Look for it. Watch them try to test it up to here, just up to here. Okay, see this is that little double bottom pattern we just talked about. There's our test. Okay, now let's see if we can get the move higher right now on up into the next level. Liquidity's up here at 44. Also this kind of 37 up here, but the swings as well. Yeah, I like this 44 area, and you can see some liquidity kind of playing back and forth in here. Okay, there's our pullback. Okay, and let's see, now look at the bid as well. See how the bid is bidding up? All right, buyers, let's see a move right back up to here. And let's see if we can get our measured move. Okay, 44 looks pretty good. All right, so we were covering here bearish because lower high, not much not much buying. Sellers still in control. Okay, the structure is still in control, the sell side, and then we're looking for, you know, the move down into these lower levels, and then we'll hold on a minute. Hold on. Here comes some buying. Look at the retest here. Buying back up here. We're looking for it. All right. Okay, now here again, we're looking for the you know, strong move, pull back, strong move. Here we go. It couldn't do that second leg. Okay, so now we're looking to see if we can get more sellers back down here. Okay, so now this pattern up in here, it didn't do it, right? But based on the order flow. Okay, we were looking for it, prepared for it, could have taken some. You could stop at break even, looking for a follow through, and let it run. Okay, so you just the trade management on these things, we're looking for it, we're poised, we know it's higher probability, and it didn't pan out. And now we're looking for the potential for the move lower. Okay, and here we go. So you'd be looking for that bottom edge in here, bottom of the range, and that selling coming in, and we know why. Okay, and then you can just stay with this one here. Okay, yeah, it's a struggle here to do this in real time, just because these things are moving so quickly, but we know what we're looking for in here, and that's the plan, and that's really what we want to have for you, is some sort of structure, some sort of plan, so you're looking for it to happen and unfold. All right, let me get to some questions in here, everybody. How do you lower the brightness? Okay, it's right up here, McLocal. I've been kind of dimming the heat map a bit, just so a lot of new traders in here, they don't get too confused by it, and the trade transactions show up a little bit better here. Okay, guys, again, looking for another measured move here. Okay, strong move, pull back, strong move. Okay, it's already kind of failed a bit, but yeah, it's right there in front of you. Yeah, exactly. This, I think we had this about a year ago with 7.3. I think that was part of 7.3, which is now the production version. There is a 7.4 now, a bookmap, and it is beta version, I think now. It might even, no, I think it's still alpha, so be careful with that one. It will crash. There will be issues, okay, because it is alpha, but has lots of features in it. All right, guys, so it looks like we're caught up in Discord. Let's go over to our YouTube questions. Good morning, guys. Good morning, Ben. Yeah, this will work on NQ just as well. The only reason that we're looking, Matthew, that we're looking at the ES is what most people want to look at. That's really the only reason. How much of your trading is based off a thesis that the order flow helps validate the play, or is it solely based off of that day's order flow that makes you play off of it? I don't know if I quite understand that question, but all of them are based off of order flow confirming it, Paris. So order flow makes up the patterns. I trust the order flow. I know it works. I'm looking for the follow through. Like right now, I'm looking for follow through to the upside, back up to about here. Okay, to 39 or so, 38 and a half. This is a nice little bottoming pattern, in fact. Okay, shoulder, head, shoulder, and look at buying on the other side. Look at the bid on the other side. Looking for buyers. Here's our leg one, pull back. I'm looking for leg two, back up to here. Okay, and you just see it again and again and again. This understanding this for me, and this was a real key for me. Understanding the microstructure and the market mechanics, what makes the market move, that was a missing piece for me for years, several years. Once I started to digest that, I saw everything differently. Okay, to be able to see this immediately, this pattern. Look at this order flow shift, right? You would have already taken half your profit up here. I would have. Okay, I even missed the bottoming pattern in here, but I would have gotten the flag pattern in here. And God, I hate to say flag pattern. I really do. I'm looking for, I see the buyers, I see them breaking structure. I see the bid is pretty strong in here. I'm looking for it to come back up and retest into these areas here. Take some off and manage the trade. I don't know if this may turn into something that comes way up here, at 62, and a nice 5-point move or something from down here. Okay? I don't know that, but I could also be poised though to capture that. All right, looking at bigger picture, it started down here though with this smaller time frame. Okay, and then putting the pieces together. Okay, I see something. Okay, I see sellers coming down. Sellers coming down. It did not do a measured move in here, flag pattern. Okay, so something's going on in here. I start to see buyers come in. I start to see the buyers test and break that structure in here. There was the pullback, looking for the next move up into it, take some off, stop at break even. Okay, and then looking for maybe the bigger move here to unfold. Okay, or stop not even at break even, it could be overall, like we mentioned. Okay, to protect you, you would make nothing on the trade if you got stopped out, but you wouldn't lose. We have Elon Musk in here. Excellent, welcome. Anyway, guys, we've gone over several examples in here, but I'm feeling that this is just kind of ringing hollow in here. I'll go through you guys' questions in here, but it's just kind of ringing hollow, because all you're doing is lining up dots and maybe the heat map to the structure. I mean, that's really the goal, and that's good, but you really want to understand what's behind it here, which will make all the difference. We'll zoom in and we'll extrapolate why these things work, that is where the magic is. Once you start to understand why these things work, then you can look for them again and again. We're still looking for buyers here, right? Now we don't know if we're going to get them, and it's starting to exhaust out up here. We might get sellers and they might drive it right back down here, and then it might come right back up, right? But up here we're still looking for buyers. Okay, we had another pullback and we're looking for extension here. Next move should be up to the swing. Maybe it does something even bigger, something like this, right? So 1 and then 2. Okay, and we can go here and look for it up here. All right, and I hate to show this stuff like measured moves. It's because of the order flow though. It really is. The pullback, look how the pullback made sense in here, back to here. And then we're talking about market pressures. How much gas does it have in it before it starts to run out of buyers or counter and find sellers? So that's why we're looking at some of these moves in here. Where's the value? Okay, where is it going to test value? Start to understand how some of these moves might unfold and why. You can just stay with swings. Actually, just stick with looking for swings up into these areas and line it up with liquidity. Okay, but like I was mentioning here, to get it off the getting off the subject here, what we want to understand is these little moves in here in the smaller time frame. So Paris, I hope I answered your question. Everything is based off of the order flow. And then now let's go in and look at the smaller time frame here, and then I'll show you why and what I mean. And then we'll look at the same things in the higher time frame. Okay, and I hope that makes sense for you. I really hope that's a good a lesson, or I hope it's just very clear and transfer of this knowledge here. Thank you, Andre. You find it very useful. It's great. It's great to hear, and we want to provide you guys with quality education here. That's very hard to find elsewhere. I mean, they'll go over all these like patterns and stuff for sure, but they're not going to go over really why they unfold into detail. Let's see. Oh boy, is it showing the sell stops with a very large filter? Yes, it is. Yeah. Oh yeah, you can lower it, no problem. I mean, we know there's going to be some stops in here. Yeah, it's just filtered them out, guys. So what are we looking for here, guys? Right, we're looking for a continuation. Right, looking for buyers up here. Now we're not seeing a whole bunch right now, but there's still some up here, and let's see if we get them now. Right now, and then this is actually a bigger, higher time frame move, right? So we can get a more powerful move up into 47 up here. Okay, now was that magical to call this out, to look for this? No, no, not at all. It's based off of what we're looking at and talking about over here. Okay, and then we're looking for this potential move up into some of these areas here due to the liquidity. Okay, now we got higher time frame traders in here now. This move is because Paris asked this question. So thank you, Paris. You were the one that put your fingerprint on this. It's like let's cover this, and it's like, oh, okay, well there's your kind of head and shoulders, reverse head and shoulders bottoming pattern, based again on the order flow. This measured move didn't pan out. We saw buyers come in, we saw them break the structure, we saw the pullback, and then we look for continuation and taking some off, and then looking for another measured move in here. Okay, so and then we talked about just now, these are the easier trades, looking for the breakout and then the move to 47. So there it is. So that's a 5-point move right there. Take some off, right? And then you've got reason to take some off. Let's go over it. And then I got to get to this microstructure, else I'm just going to forget and continue to blab about all these things in here. Okay. So we have reasons for it, right? Well, this is kind of where it broke out from. Okay. So again, in the measured move, like, do you guys ever look at the ticky or the tick charts, or what are all the market internals? I'm going to do a quick poll on that. This will be interesting, I think. All right. Do you use market internals? Would love to hear back from you guys. Let us know here, because yeah, I'll wait. I'll wait for an answer. Or have you used, or do you find them useful? Like, yeah, one of those, kind of all the same question. Okay. Oh boy, you do. Well, we only 5 votes so far. So guys, get in there and hit it. Now we had, again, remember, we had reasons for 47, not only just because liquidity, but we also now have a move that kind of equals that. Take some off. Look for the next entry. This way, you could take pieces of this whole move here and expound your trading, and it's all higher probability. Right now up at here, we're looking for a pullback. Okay, well, the first pullback is right here, to be honest, right in this little pocket here, and you can see what it did. It went down below it, and now it's kind of channeling down below it right now. Okay, so you might be kind of stuck in that one. This is one of the things I just don't like about pullback trades. I'd be looking for a pullback here in continuation, and then I'm kind of stuck in it here. The second pullback would be here, this little area here, right? Let's mark it up. Anyway, so let's go zoom in here and finally get to this here on some, like, Paris's question on the microstructure, and then putting the in the order flow, and then how to read it, and the exercise here is to go through this to relate it to this, or bigger picture here. Okay, and that's the goal here. So let's just zoom in here and let's read this in here. All right, so what do we see in this structural element in here? Well, first off, who's in control? Okay, well, sellers are in this move here. Okay, and this is a counter trend move. We know that, but sellers are in control in this move here. Okay, from this point on, selling strength. Okay, look at the buyers compared to the sellers in here. It's all relative. I know McLoco and you guys like your cumulative volume delta. Some of you guys put it in here, and I'm not a big fan of it, but it's not bad. Shoot, I missed that one. Why isn't it showing up here? It should be showing up. Hold on. Oh, okay, because I didn't add one in. I need to create one. Right. Okay. Okay. Now it'll show. Now I can put it in here. Okay. All right. All right. So let's take a look at this here. All right. Now, even this this pullback here, like it's starting to be a lot more complex. Okay. So this was our line in here, looking for a pullback to that, and then it swung all the way back down here to where it actually initiated kind of down here, right? And now we see strong move. This can be a nice stop run. It is, and then a pullback here. All right. All right. So sellers in control still, right, in this move. Okay. So let's see here. Do we see more sellers in here? Yeah. Okay. They should drop it down to 40. Maybe they can drop it down to 39, 38. Okay. There's 40 already. So in this very, very small time frame, you'd take some off. Okay, you'd be looking in and stop to break even or overall break even. Okay, and then look for the continuation down to 39, 38. All right, so and you know it okay, it came back up here. So you took some off. You got stopped out at break even. Boom. All right, so sellers still in control in this move. Okay, now let's read it up in here. Okay, what's going on? Okay, strong move, buying, and then but sellers are still in control here. Okay, now if buyers are going to be in control, they got to get it back up above 43. Okay, now here we got some interesting stuff. We got the bid 42. Sellers took them on, just traded through it. More selling here. Great. All right. I'm looking for sellers, and they're in control. I'm looking for them to continue to move into 38, 39, 38, 37. Okay. Here's a small pullback. Okay. Back up into this area here. There's your pullback. Okay. And then here's your leap of faith. Here's your risk. Okay. This is where you'd be in. Okay, it's not a trade recommendation. We're just trading the order flow in here. The same patterns we're just looking at and who's in control on these very, very small time frames. Okay, and looking for sellers to come back down to here where they sold previously. And then I want to see them break it back down into 39 and lower. And there we go. Take your profit. Done. Okay, look for the next trade. Okay, so I hope, Paris, please, if I can get your feedback on here. Does that make some sense in here? Okay, of the structure on this small time frame and what we're looking for and why we're looking for these things to unfold and then being prepared for them. Okay, so the original question here was so much of your trading is based off of thesis. And order flow. So no, I'm just looking at structure. I'm looking at who's in control in a structure and then looking for order flow within it, basically. Very, very much like what we're just doing in these webinars. And this small time frame to a micro time frame to a daily or monthly or hourly or 15-minute chart. It's all the same. Okay, it's just the visualization in here is a lot weaker, but it is the same exact market mechanics, just higher time frame and a lot more transactions. Okay, and a lot more upending of things due to news or geopolitical stuff or whatever it might be. But the order flow and the market mechanics stay the same, guys. Like this is just remember we talked about this one here about these gaps. This is a beautiful island gap. It's just really pretty. Both sides here, gap up. It filled the gap here. It went just up above the swing here, and then it came back down, and then then it gapped down below that. And then look at this. We saw this move. I think it was Scott last Thursday. The move lower, and then everything shifted and changed with the ECB or the euro. Look at the strong move up to where it didn't fill the gap here. Not enough to fill the gap. This is where we got some top profit taking and maybe some sellers coming in. And where did they bring it right back down to? Okay, you just can't make this stuff up. It's beautiful. And then look at the gap here. Here's your flag pattern here on the hourly, or even on this 15-minute right here. You can see it, right? It's hard to see, but it's actually very simple. Here's your strong move up by a gap, consolidation, and then the strong move up is again by a gap which filled this island gap up here. So that's filled. Okay. Now, why gaps fill? Why do they work? Why would you trust this implicitly? And this is an important part. And Paris, I think this will answer your question too. Is to understand the mechanics here behind it. Like why does that order flow event work? Okay, like this here. This is akin to a gap right here. Okay, and in fact, it's a stop run, but it's akin to a gap. It's just a very, very strong, powerful move. And then it's basically a volume. Look at the sell volume here. Okay, look at the bars. Look at the size of the dots. Look at the pullback all the way back up to here. Okay, where anyone who's stuck up in here is likely going to start selling in here, because it's like, oh God, it came back to something like break even, and they will sell, or maybe sellers will reload in here, or these people got stopped out in here, and this is just a vacuum in here. Okay, price can just kind of drift back up here, and then not find any more buyers in here, and then you're going to find sellers down here, and you look for the move right back down to the bottom of the range, and then potentially, since there are sellers here, they may break that range and come back down to 38. Okay, now, so we're just this is why that gap filled. Okay, it's not a gap, but it's the same principle. This move up into here, this is why that gap bottom of the range, and then protect up here, and then not find any more buyers in here, and then you're going to find sellers down here, and you look for the move right back down to the bottom of the range, and then it's not. Okay, look, I'm over in Discord here. You guys use the tick, you use some of the market internals, trend, yeah, the ADD, yep, yeah. All right, so as you guys answer that other question about what's up in there, I'll go over my opinion on these market internals. There's only so much breadth, JC, just like you're saying. There's only so much breadth or so much power in the market. Just think of, I mean, the analogy can be used for so many different things, but like cyclists or athletes or whatever, they only have so much power before they kind of need to take a rest and then power up again. And the market is, I think, very similar, in my opinion. It only has so much power before it needs to kind of take a rest and then regain that power. If it does, it may not. It might counter some other power, and they may take over. Okay, so anyway, that's I think the market internals are great. So yeah, may want to look at that. I know Scott does, for example, and just to gain like kind of an understanding of like the strong winds in the market, and those strong it could be a breeze or it could be a gale force wind, and then look for a break from that, right? And that can also help you out on some of these measured moves of like this move up to the top, and then if you see like in your market internals that you just don't have much more left, and it's peaked out in the internals, so you're looking for a pullback. All right. Okay, so let me get back to the questions in here, and nothing back from Paris. Okay, I was just looking for confirmation on that. Hope I answered the question. Oh, why are icebergs related to stops? Well, they're not. I'll explain. But yeah, hold on a minute here. Let me make sure that I'm caught up on stuff in here. I just can't stand missing these things. All right, so guys, now this is turning into a bigger double bottom pattern and a nice one. Okay, so now we're looking for buyers here. Okay, so we see strong buying, broke the structure up here as well. Here's our pullback, higher low. Right, here's the selling in here. Okay, now what we're looking for this to complete is here's our pullback. Now we're looking for buyers again up here, continuation. Next one should come up to here, match it up with liquidity. It's actually here at 40 instead. So and now look for your measured moves again. Okay, and again, this is just one way to look at it on this small time frame. Okay, but you can reduce your risk, and then if you're playing a bigger, higher time frame, well, you're looking for a double bottom pattern here, well, maybe your target is like way up here. Okay, but it depends, and we don't know if it's going to play out or not, but we're seeing something right now on this time frame. Okay, and this is actually pretty good, because in essence this is not a micro time frame like we saw kind of over here. This is a bigger time frame. Okay, we actually saw this pattern when we were zoomed out about this level, something like this, maybe even a little bit more, and then we saw a strong move, then the buying, and then strong buying up here. So we're looking for them to test up into these areas here. Okay. Okay, so there's 42 just about to trade. I'm looking for them to break it too. Okay, up into here, 44 or 43 3/4, whatever it is. Okay, I lost track of what I was talking about. So I didn't see, do we get all our market internal guys in here? Oh, and what we were looking at up here, that's right. We also had another thing up here, which was in the order book. They were showing pretty strong on the offer. Right, and then you look for that continuation, because what is the reaction to that offer, and you find selling, you're looking for the continuation. All right, so pretty close on who uses 48 votes. That's not bad. So on who uses market internals, and they slightly edge out those that don't. So guys, it's up. That's an interesting one. Here's the data, and now this is again why we were looking for 44, but this is again why we take our partial profits. Okay, look at the strong selling, come right back in. Now it still may be a buy, right? We don't know if they're going to be buyers down here re-engaging or lack of sellers. One of the things we look for in the order flow to give us a hint is a pretty strong bid. Okay? And then the reaction to that strong bid is very little selling here, more buyers starting to come in, and then we look for a pull. It's basically, because this is a strong move here, but it's basically a pullback that we'd be looking for, and that pullback would be here and up here, and then we're looking for them to really pick it up on that buy side. Okay, now that double bottom pattern here is failing. Okay, here comes the strong selling, so we're looking for continuation, and I just can't get to it fast enough. We're looking for continuation here on the sell side, and we're looking for 2025 now. We're looking for down here, this liquidity down here. Let's put a measure move in on this one too. This is a pretty strong move here, pretty strong selling. We're looking for a continuation move here. Okay, so we can mark this one up, okay, and this one up here as well. Beautiful, lines up with liquidity down here. All right. Okay, I want to get rid of those. Hold on. But you guys got the picture. Okay, and then let's look for, you know, like flag pattern in here as well. Strong move. Again, strong selling in here. So it's kind of a jumbled, it's not so clean in here. Yeah, I would be kind of careful with this. This is good, and then it's not really telling us it really wants to go lower here. Right, so we have to be careful. Okay, the other ones were pretty clean. These are really clean in some of these other areas, I think. Like in here and like in here. These are pretty clean, if that makes sense. Back to Oboy's question as well on the relationship between stops and icebergs. Well, it's interesting to see that relationship. It doesn't have to be there whatsoever. Like here's a stop run here, right? But maybe the iceberg, the larger players, they don't care about, you know, they want to be a buyer down lower, or maybe they want to reload on the offer here, which is exactly what they're doing. They're 577 has transacted so far here on 2 separate orders, and then another one up here, so that, you know, who cares? They're like, who cares if it's a, you know, at least these larger players are telling us that they want to be sellers. Right, so there is no context or relationship here. In fact, there's some icebergs beforehand here, right? And then it's just a larger player. It's larger players versus smaller players. You know, now they're trading into these icebergs here. Okay, they're absorbing it, now there could be more buying pressure, and it might go through them. But right now, we know the move is to the downside, and they want to be sellers at the top of these areas in here, as you can see. And that's pretty good insight if only if we get sellers back down here. Okay, because all of this buying in here, we got to see sellers drive it away from it. Okay, and I wouldn't touch it until, because look at the buying pressure. They're maybe these guys are, you know, getting filled on the they're buying back their shorts, and we don't know. Yeah, here are the icebergs. Tons of icebergs in here, guys. Tons, right? Almost 2,000 on just this one, and then lots of other smaller ones in here. Okay, again, context. Okay, great. We noticed that here. Okay, here they are. They're getting filled. Right now, we're looking for sellers down here. Let's see if we get them. It's set up pretty nicely if we can get sellers here, and then it should be a nice move down into 26, 25, something like that. Bottom of the range here, 27. And almost there. There we go. There's 27. Okay, you take some off again. All right, so there is some context in there. It's a great question about context between stops and icebergs. Oh boy, and that's why we did these separate lines in here for stops and icebergs. But they don't have to. It doesn't have to be a relationship, is what I'm trying to say. Right, guys, this is turning into a real nice move. But you took some off, and you'd be holding the rest here. Now you'd be looking at your measured move. You'd be lining that up with some profit taking, and then look at your market. Maybe you're in market internals. Get out at some here, right? Or maybe you have your higher time frame levels and you're getting out. This is another beautiful, strong move. Pull back, tons of ice, strong move. Get out. Okay, look for the next one. These are, I mean, these are big moves. Guys, we're just, you'd be killing it here. You know, so even on some of these reversals in here, and then like the double bottom, we saw the move back down here. We saw, okay, well, maybe it's a big double bottom and stop to break even. You took some off here. You saw the selling coming in back down here, and you're like, okay, well, hold on a minute. Let's look at this. Looking for the break and the continuation, pull back, icebergs, and then sellers down here again, continuation, and then profit taking down here. Okay, so now again, it's not, I'm trying to outline just some examples of a potential trading plan. There are many examples of a potential trading plan, looking at order flow and market mechanics, understanding this, and then putting those pieces together. We got some good stuff here lined up with the icebergs as well. All right, let me get back to the questions here. We've been calculating the very simply by looking at the range, drawing a square, then drawing a duplicate square, and then moving it, and that's our measured move. There's a few different ways to do it. Maybe you measure it from full range, or you measure it also on the pullback. Okay, and I'm also trying to deflate fibs, to be honest. And maybe there's fib traders out there. I'm just not a fan at all. I would love to be a fan of it. I would love to believe in the golden ratio. I just think it is order flow that makes it up. Now, if you are a fib trader and you swear by them, that's great. I would just suggest match it up with order flow. Match it up with some of the liquidity in here, and you've just made your Fibonacci plan much stronger, much more high probability. Okay, looks like oh boy, you're killing it as well. All right, excellent. What I don't like about CVD is like I don't like looking at some sort of line in the subchart to give me insight when I want to see what's happening in the relationship of the structure in here in the order flow. I know in the CVD, like I know that most of the time I know that you can read the clusters of volume, and that gives me way more insight than CVD, in my opinion. No, the structure. CVD is like I don't like looking at some sort of line in the subchart to give me insight when I want to see what's happening in the relationship of the structure in here in the order flow. I know in the CVD, like I know that most of the time I know that you can read the clusters of volume, and that gives me way more insight than CVD, in my opinion. Like, yeah, this one I'm not sure right now, to be honest. It might be pretty equal. It might, I've got it, so let me add it. I think we might be getting some divergence in here, but I don't, there's buying and selling in here, so I don't really see it I know there's a lot of selling here, and see how that doesn't really give me much in CVD either right now. Yeah, all right, let's see the sellers here drop it again here. Okay, and let's see if we get down to what, 37.10 or so. Yeah, I really don't, I mean, I just don't want is I don't want to be I've been duped so many times by these false breakdowns and breakouts due to CVD, right? When the chart was telling me something else anyway. Okay, so yeah, like right in here, potential for the move back up to here, potentially. I don't see anything in CVD there. Maybe some divergence, maybe, but due to this volume here. Now back up to this range up here. This is where I have to be really careful with CVD. Now there's divergence up here, but if there's strong buying in here, I don't care. It's going to break. There's no divergent play here. It's going to come up to here to 20. Right? That's why we've been covering the strong move and then followed by another strong move in these flag patterns. Right? And that flies right in the face here, that CVD that was divergent up here at the top of the range. Right? And you don't even have to complicate it with CVD. It's so seductive to look at a line and tell you what's going on, but read the order flow is going to tell you so much more. Right? So that's my say on CVD. Mr. Pocket. All right, Captain Price, welcome. Lots of energy. Yeah, even with one iceberg, it means there's selling there. And it just means that one transaction took place in that iceberg. We don't know what's behind it. We just know the transactions of the icebergs. Tony, let's see here. Okay, using an offshore broker. Any recommendations on getting a regular broker? No, not really. We can't do that. Recommend any brokers. We work with a bunch of different brokers and partners, and that's very sensitive. They're very sensitive to it, of course. Yeah, guys, so anyway, like here's that move up into 20, and then look at the failure now, and it's coming right back down. Now it looks like it just wants to come into 11 and 10 here. Okay, but we got to see how we get buying in here, but the structure hasn't broken yet. And if this buying, if they're selling down here, they gotta get stopped out. So we'd look for a stop run after this accumulation here on the buy side. Now we don't know, like, you know, maybe it's the maybe we get some sellers here and then it comes back up, and then we're gonna move back up into 18 or even 20. Right? We don't know, but we didn't get the sellers here, right? We're getting buyers up here, and it did break this small structure. But let's watch this here. If we now it's poised either way, to be honest. I would still like to see the sellers here around this 14 or 15. There they are. All right, sellers, you got it. You got them on the hook here. We should get a stop run to the downside as well into like 12 and 11. Okay, we look for that stop run. And there it is. Okay, let's zoom out and get a bigger picture, though. It hasn't really stopped out everybody. We're looking for a bigger stop run move. Okay, and it's still going. Okay. Guys, we've been seeing some really pretty nice stuff in here today. been some nice moves in here, okay, and understanding these little dupes in here as well. Yeah, so I hope this is making some sense or clarity. And we're looking at order flow events within these kind of bigger structures. That's really the key here. There's now into that liquidity at 10. But that's why we covered that who's in control part before. You don't need to look into all these really complex structural things. Just identify who's in control. And like I said, in my opinion, I mean, you can see that on these higher time frames very clearly as well. Like here's our gap up, and we know sellers are in control for the day here. Okay, so we're looking for a move back down to this 3700 here. It's 3701 is the top of the range. Here's the gap. Now as we get down here, it's not going to be so simple. We're looking for the move to continue. The hourly chart is strong. 15 minutes chart is strong. We're looking for continuation. Okay, but as we inch down into here, it's going to get a little more complex and some back and forth, etc. Okay, you're welcome, Mr. Pocket. All right, I think I got to most of your guys' questions there. I think we're all clean and clear here. JC, thank you. Yeah, thanks, 360. This is over in Discord here. I really appreciate it. Really appreciate all the nice comments, guys. Yeah, and Kevson, again, like I can understand, like I think one of the things that was hard to kind of bridge for a lot of traders in understanding order flow was starting with these smaller structural areas. And I'm a great tool as well. Thanks, JC. Is these smaller structural areas and then extrapolating the same concepts and ideas. That's what she said, Jay-Z. That's pretty funny. Yeah. Taking these market mechanic and kind of structural areas in here, understanding them, and then having that be the basis for higher time frame structure. And I may have misread that, thinking that that would be kind of easy to understand. Let's just zoom out for the day. Let's and go over the higher time frame. It's the same things here. We'll clear all our drawings, and we'll also take off the icebergs. Sorry, here. And not show them for now, or the stops. Okay, and look at the higher time frame here about who's in control. Okay, well, obviously this is pretty easy now, but we had our reasons for all sorts of things in here along the way. Okay, so on the way up, buyers were in control, and then we noted it here before the webinar. Look at that selling cluster up here. Okay, and there was some selling in here, some not a whole lot in here. Buyers just certainly in control, and they can't reach up to 80, and they can't even make a higher high in here. And we see sellers here. Now we have the cash open here, and there's all sorts of volatility and stuff. But getting sellers to come in, test the bottom of the range here, looking for them to try to drop it because it cannot make a higher high. Looking for sellers to come in here, down here, and then to push it maybe down to here, or wherever there is liquidity as well. And that's a beautiful move, okay, down into here. Okay, see the buying coming in, broke the range here, and look at the retest back down to there. And then we got to move back up here, and this is where the webinar started here at 10. And we read that move back up. And then yeah, and then talked about taking some profit up here, and then we read the move. Now we're looking for pullbacks here, and maybe the move up to here. But then once we started to get down into here, we started to look for the continuation to the downside, something like that. I can't recall, guys, exactly, but then we look for that move to the downside, and we even saw this little kind of move back up as well, looking for again for that move back down to the downside, and it unfolded nicely here. But let's just take a look here and take a look at who's in control, and just stick with that, right? So here, buyers, okay, even in here. Okay. Now a couple pivot points to look at where sellers may try to overtake the buyers, here and here. Okay. So now we've got something to look at, and also the swing here. Okay, and that one didn't line up so nicely, but something like that. The other ones lined up pretty well, pretty nicely. And then look now. Here's the double top on the bigger picture. Sellers, we see the selling coming in. Okay, we see the selling coming in here. Now it's really kind of jumbled in here. We saw a lot of buyers in here and here as well. So this made it difficult to understand like who's in control. That's when we just kind of zoomed into the smaller time frame, because here we were talking about it maybe coming back up into some of these areas, right? And we didn't know. But once we saw those sellers start to come in and move it and down at the bottom of these ranges, and we saw that selling pressure come in, and we can read that selling in control in here, we can look for some of these moves and continuation and measured moves. Okay, so let's just clear the drawings again and take a look at the bigger picture. Now, this is the way to mark up some of your structure. Okay, and then you can lean on that structure on those higher time frames. Go with the trend on who's in control in areas, and very, very clearly, like here, that's pretty visual. Okay, also here is pretty visual. Okay, now they're firmly in control. Okay, but let's take a look here. Are they still moving it in control? Well, yeah, but look at liquidity getting filled on the way down on the bid. So that means this is buying pressure in here, met with sellers. Buying pressure met with sellers. Okay, the aggressors are starting to see some buying. Okay, we're still sell side. Okay, we see the retest back up here though. Some pretty strong buying. Okay, but we don't see the structure broken. Okay, now we're starting to see, okay, strong buying. Okay, here again, strong buying. They just traded into some high liquidity here, and they're still buying. Okay, so let's see if we can get buyers back up here though. Okay, look at the gaming starting to take place here. Right, so that's up to you. It's kind of hard to catch some of these reversals, but especially when they're gaming like this at the European close right at this time. Here's 11:30. Okay, so we want to be aware of that. But this is where we got to see the buyers up here. Okay, they still have not. We're still sell side. They did not break the structure yet. Okay, but we just note the strong buying in here. Okay, so now this is we're still sell side because of the bigger picture. Okay, just mark up your levels. Right, and you can look for these areas to be tested, and then look for follow through as well, back down to lower levels of liquidity. We know that on the higher time frame, the figure looks pretty good here into these levels, and we know it's going to get a little more complex down here as well. Okay, so maybe you just took this move and you're not interested in taking a risk any longer. Okay, so here we go. Let's see. Here's the pullback. All right, do we get buyers? We got some. Do we get them up here at 10? Let's take a look. Maybe a little bit higher than 10. Okay, up here. And again, I wouldn't, sometimes I like to trade them up into these areas here, take some off and look for the continuation. If it's strong, it looks like it's going to do it, then I'd look for that. This one I just don't like due to the timing, as well as look at the offer. There's some pretty high liquidity in here on the offer, and that is keeping me away from it right now. Okay, but we're just talking about all sorts of different ways of looking at it, and we're talking about a much smaller time frame in here. But because the bigger picture is what I wanted to cover here in the structure, and it's sell side, and it still is sell side. We're just noting the potential for buyers coming in here, and it could be an opportunity on a very, very small time frame. The gap closed. Okay, thanks. Oh boy. Al baby, you retracted your message. Get it in there, Al. All right, guys. Well, anyway, again, like these kinds of structural things in here should match up very nicely with whatever you're trading. Does not matter. If you're a volume profile guy, great, line it up. Fibonacci guy, great, line it up. Patterns guy, fantastic, line it up. And start to understand the market mechanics to unfold to complete some of those higher time frame patterns. All right, guys. Well, if you like this video, please give us a like, subscribe to the channel. That helps us a lot. And we'll have some other order flow events coming out pretty soon. I'm sorry, other webinars and other education coming out soon. So look for that. Some other streamers, etc. We got a lot of good stuff coming your way. So, stay tuned, and we might have I'll go to our YouTube channel, scroll down, order flow education here, bookmap educational course. Click here. We have the course here. This will set the foundation, especially part 1, market mechanics, trading the order flow, market depth trading. Then put that together, understand that at a high level, and then you're going to be free to do whatever you want, trade whatever you like. All right, so this course here should be the fundamentals. And then stay tuned. For example, Tom B is next, or he's already started. So he is a volume profile trader. Right? So now you can take that the next step. You'll understand from this course or this webinar and live analysis the order flow, and you can transfer it into the volume profile.
Some of the things it does. And one of the reasons it tends to do certain behaviors is because think of the market as elastic. And in other words, if the market was short, and especially after Friday's move down, where the volume point of control, the highest volume took place at the low of the day, that was a rejection at that time of that level. And there was heavy selling on Friday. And if you remember, if you followed the stream, Friday we were short almost the whole day, other than an attempt on the long side, which failed, and then we turned the boat around, and then short, 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 short. Well, yesterday was kind of the opposite condition. Friday, we had sellers, okay? And so Monday, when we gapped like we did and rejected Friday's behavior, that set up the squeeze. And that's what we saw yesterday, and then we had the continuation overnight with the gap. So that brings you to the present moment. Now, there's two possibilities on a gap. And by the way, if you're in YouTube, welcome here. Welcome to YouTube. And please remember there is a 15-second delay in YouTube. So if you have any questions, post them. I'll do my best to get to them. So we had the gap. Now, with these kinds of behaviors, there's two possibilities. And if you remember yesterday, we had the gap. However, we had yesterday what was called initiative or driving behavior. And what that really indicates is highly motivated buyers. That was yesterday. And that behavior set up the context. And if you guys remember, if you've been following the stream, the context is key to get in alignment. So today we gapped again. However, if the shorts who are in the market was the fuel, so they were taken out, and there's no new buying above that squeeze, and we never know how high it'll go, then what might happen? Then sellers may look at this as an outsized opportunity to sell, and that is called responsive. They are responding, first of all, to the higher price, and it becomes initiative. So in other words, market goes higher. If you're a seller, you want to respond to the higher price, and if you happen to be long from yesterday, let's look at it from the other side. You are responding. In other words, you're taking a profit. What I meant to say was it gaps higher, squeezes out the shorts, and you can see this here on the stream. Almost 1,000 stops, 600 stops. These are buy stops. They are buyers from Friday, potentially, and the squeeze from yesterday and a continuation higher. Now, what happens? If you were long from yesterday, what might you do? Might you take profits up here? That's the responder. So then two things can happen. The market gaps, you get the longs who begin selling. The buyers are the buy stops. Then what happens from there is key. Well, the longs from yesterday are selling, and the sellers, don't forget, the buy stops have got taken out, but there's other shorts looking potentially to enter. So you get responsive selling, and then you get initiative sellers. So two kinds of sellers can show up in the market. First of all, who are the buyers? Buy stops. Who are the sellers? Longs who respond to the higher price. Give me that profit, I'm out of Dodge. And then what happens? Two possibilities. It pulls back, and after responsive selling by those longs from yesterday, and new buyers take it higher, right? One possibility. Or responsive selling and new sellers come into the market. And that's what happened today. Two possibilities. Now, one of the ways you kind of get a sense of what might happen, and of course in trading we don't know what's going to happen, is what is the context in multiple time frames. The context is down in the higher time frame, right? So do you think you really want to be a buyer if the context is down, and then in the day time frame that we operate in, that we know there's the potential underlying, and that was yesterday, of a short squeeze, and then if the longs from yesterday might take a profit and we get the responders, do you want to be a buyer? Or might you be looking, now you could be a buyer if there was a reason and if we saw behavior, but what do you think the path of least resistance is? My thinking is short. So let's go take a look at the behavior and how you might have participated. So let's look at the clues. Any questions, please post them. Any questions so far? I'm just checking. There's about a 15-second delay. In YouTube, so it takes me just a little time. And you guys in YouTube, if you're getting value out of this, please hit the like button. And if you haven't subscribed to the Bookmap YouTube channel, you might want to take a hit on that thing too, so that you don't miss out on other education. All right. So let's look what happens. Now I'm going to walk you through the behavior. And what this is based on is something called auction market theory, and the tool that we use to observe this behavior is something called the volume profile. And all the volume profile is a horizontal representation of price and volume. So we can see, because all prices are not the same. So, and with Bookmap, we can see the buy stops, the sell stops, iceberg behavior, buying icebergs, selling icebergs. So you see all these buy stops going off here. Trouble in River City. So these are buy stops. They're still getting squeezed. You're seeing all these stops going off. Now, who's getting squeezed up here? That part I don't know. But look at the iceberg orders. 2,000, 800, 400. This is like 3,000, almost 4,000 icebergs that we can see right here. So there was heavy selling. Here's, and I'm just giving you kind of the lay of the land, and then we'll go into the actual structure and potential areas to get involved. Let me see if I can get this thing over here so I can show you. Okay. RTH open is here. I'm trying to open this up, but I might not be able to get into this one to show you. Now, right in here, this is the volume point of control. And what that says is this is where the high volume initially, and this is sensitive, don't forget, this starts at 0 right at the RTH open. And this also starts at RTH open, and then it starts filling in as the market trades. This is what an auction looks like. And all an auction is another term for consolidation, okay? So don't be concerned. When you see something like this, you're going, what is that? All this is showing us is the volume. And the interesting thing, now this is the whole session.
ES, long 2P, long 2P.
Let me just see if I got this right. And this shows what's on the screen here, the chart. It's called chart volume profile. So if I isolate an area, and I'm just going to show you what it does. In other words, this is all the volume and that's traded so far. And this is what I can see. So it allows me to kind of look inside. And that's very important for me. So let's go back to the open. I just want you to see the tools and how we kind of look at this thing, or you might. And remember, this is not a trade calling room, and this is for educational purposes only, because you know the outcome of any interaction with the market is random. So let's go look back here. So market opens. Now look what you have. Open, which is right here. Okay, so it's very important that you kind of see what's going on here. This is the overnight high, or ETH high. There's over a 90% probability, past performance not indicative of future results, that either the overnight high or overnight low will get taken out during the RTH session. And write that down if you're not familiar with that. It's a nice statistic, especially when you have nothing else, you know, and you're kind of starting out. So because we're so close to it when we open, you know, that seemed to me like a pretty good bet. You might too. So anyway, that was an area. Now I'm not buying because I'm looking for responsive selling initially. And then, right, as I mentioned, we'd either be, if the context was going to be up, we might be looking to get long, but we just squeezed out these shorts, which I was mentioning about the higher time frame context. So I'm looking for shorts. But I don't know. You know, I'm just, you know. So for me, this is our open, and you see two-sided trade. Now let's think about how an auction works. And I'm going to take you sequentially through this thought process because it's the narration of the behavior, at least for me, that helps me get in alignment as well as I can. With the understanding is when I'm not in alignment, you know, I make the donation to the Floor Traders Retirement Fund and I take a stop. And that's just overhead, in my view, cost of production in a business model. And trading is a business. It is not a video game, and it's certainly not gambling if you've done the work to understand where your edge is and understand that when an edge shows up in a random fashion, that is why you take the same trade and one time it works, the next time it doesn't. Maybe it works 3 times and the next time it doesn't work 3 times in a row. And you always say, well, why? Well, that's random, isn't it? So we'll look at randomness too, because that's just part of trading. It's not about being right or wrong. It's about having a vetted trade plan that you can develop confidence in that's backed up by statistics. Because when things get weird, which they do because the market's random, you're going to need to have that to reassure yourself that you're on the right path as opposed to changing it. Because it might not be broke. You just might not know how that distribution shows up. And we talk about that in the Trader Lab when we talk about trade plans and becoming with the goal of having a career in the trading business, which has to start with certain basic elements, and that's what we cover in the Trader Lab. So if you don't have those pieces, you might want to visit the Trader Lab and see if you can gain some insight. So here's our open. Chop, 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 right? Chop. This is a consolidation right here. And here's what a consolidation is. Now I'm going to describe the auction. Open, and we don't know what it's going to do, remember. Too low, too high. Too low, too high. You see how it went both sides. So in this little area, which looks like this, based on the volume, too low, too high, you see this node sitting right here. That's called a high volume node. And let me explain what it is. It's really simple. In the auction, if you go shopping, think about what an auction is. If you're a shopper, and that's what a consolidation is, shoppers, buyers and sellers on each side. If you go to the store and let's say you perceive the retail price in the S&P is 37, 72, let's just say 75, okay? That's where that high volume node is, retail. And you'll do business at retail. Sellers are happy with the price, buyers are happy with the price in this auction. Inside that price, so if you're a buyer and you perceive 75 as a fair price, if they put it on sale, right, as a great shopper for S&Ps or ESs, you perceive, since this is the retail price, and I mean you, I mean somebody, not necessarily you, those participants in that interaction or auction think this is too low, they're going to buy it. The sellers see the price because it's on sale based on your perception of retail price, which is up here. So you buy it. Then it comes up here and you, the buyer or other buyers say, you know, I'm not going to pay that. You know, I'll pay retail. I'll even buy it on sale. But I'm not paying this price. And you being the astute S&P shopper, you don't pay up here. So if the sellers want to sell, as the buyers exhaust, they have to lower the price. And this is how the auction works, buyers and sellers interacting. But here's the important element. This is like its own little store. And this is how I think about these things. An auction or a consolidation is where buyers and sellers meet. Now suppose this is just a small store and it only has limited interaction because it's like, I always think about that convenience store down the street. They don't have lines at the checkout usually. They don't have people standing outside the door. They don't have everything. They have a small amount of product and a small interaction between a limited number of buyers and sellers, but they still have their retail price for whatever that S&P product might be. Here's the key. So auction, breakaway. This is the first sign right here that this might, underlined, might be too high. This is the retail price, this yellow line, at the moment. So here you have too low, too high, retail. Breakaway. That means basically this auction is complete. This is the retail price. And now the buyers and sellers have left the store. Now what happens next? We come back and we check it. This is the first opportunity, but it's an aggressive short. Pull back the VWAP, pull back to retail, and this would be a potential short. If this is too aggressive, and I'm just showing you structure, we check it too high, we break down again, and look what happens here. This is our next auction, right in here. Too low, too high, too low, too high. The retail price moves lower. So that is suggesting at the moment this was too high, which is why we left this convenience store. Now we break down, so it shifts lower, we break down, and right here is that consolidation. Here is the high volume. So think of this like an auction, too high, Now we're auctioning here. Too high, break, potential short, stop would be above, oh, sorry with this mouse. It's a trackball actually. Too high, so short, so auctioning lower, sellers. Now where's the next potential location? Too high, right here, liquidity comes in, this drops down to here saying too high, potential short, so short, 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 short. Well, let's keep looking, okay? Now, I don't remember all this except I was trading it. See the behavior. Too high. It shifts lower. This now becomes retail, retail. Break, pullback, potential short. These are all shorts, and these are all structures and behavior that we discussed in the Trader Lab. So I'm just going to go through all this so you guys can kind of see what's going on. What I'm showing you here is something that is consistent and in alignment with the context, which is south of the border, or down, sorry, get kind of, you know. Also, look at this right here. I want to show you the liquidity.
Iceberg ES sell 401. S&P sell ICE 501.
Selling icebergs going off. Interesting. 2,000. Thanks for playing. Liquidity in the book and alignment short. Remember, I don't call trades, but I do post some of these in the Trader Lab. There's more. Now, this movement of this retail price, think what it is in an auction. It's like the market checks a price, and if it's too high, it moves away, right? As the market's moving down, volume is moving with the market, which is suggesting potentially underlined lower. Too high, break, pullback, lower. And there's one thing I forgot. Oops, sorry. The first hour low, first hour's 9:30 Central Time, so 8:30 to 9:30 RTH, is called the initial balance low. This is another potential setup, or not setup, area to observe, as I like to call them. And here's what happens. The first hour low is over, and write this down, and it's right here. It's covered up, that's why I didn't see it. Let me open this up so you can see this. Try to open it up. Come on. There. IBL. IB low. Boy, I'm having some trouble here today. I think it's too much coffee. You know, you try to run a mouse with coffee, I'll tell you, mine jumps all over the desk. Hold on. So you see this level right here. It's called the initial balance low, first hour low. Now let me explain what's going on. At 9:30, it's set. So right in here is where the level is, and you can see. So we take it out, we pull back. We have a setup in the Trader Lab, as I like to think of it, it's called the IB continuation trade. And by the way, if any of this interests you, you're all welcome to visit the Trader Lab. There's 60 PDFs that you can download that meticulously identifies these behaviors. So this is a potential short this is called a continuation trade. So let's look at it. And then there's going to be another one right up at 47, which was narrated in the Trader Lab. Gosh. So let's look at this one. So right here, I'm going to open it up. So and write this down, guys, if you haven't thought of it, and even if you've heard this 30 times, hearing it 50 times won't hurt you, because it's really important that these concepts, if you find them useful and if they make sense to you, that you kind of internalize them and you narrate the market as it's unfolding, and you see potential behaviors. And that's all you got in the market is potential. So here's the potential behavior. Many think like a retail trader, don't act like one. Very important piece, I have found in my own trading, because as retail traders, many of us do the same thing. And if you think maybe even most of us do the same thing, do we want to do what they do? Or do we want to use that behavior to potentially alter how we interact with the market? Because there's a certain consistency in retail trader behavior, and based on, and it's really for me an opinion that it's so consistent that I've made it part of my trade plan. So I don't want to join them. I want to use their behavior, and then after their behavior, and if there's no continuation, then I want to put my trade on potentially. So here's the behavior. So I'm coming back. First hour low, IB low right there. Breaks out. So how do I get on this trade if I wasn't on it? Here in this condition, in this context, which is down, my objective is continuation shorts. Don't forget I had shorts from all the way up. Now I could be out of the trade, I could be anything. Doesn't matter. That's subject to your trade plan. But suppose I either want to initiate a trade or add to my short. This is all a function of your time frame. Right here, I'm going to show you a trigger. So retail traders tend to keep their stops collectively around the initial balance low. And they trail their stops above the initial balance low. So it's reasonable to anticipate that potentially underlined, we will get back above this level and take stops. Now what we don't know is how far, we don't know if, we don't know when, we know nothing. So remember, we know we don't know. But if you have a vetted trade plan, you're going to be anticipating potential behavior. That's what setups are, right? And then, like everything, we don't know. And the outcome of any interaction with the market is random. So that's kind of where we're standing. So let's look at the behavior. Now I'm going to show you a setup. And these are, remember, past performance is not indicative of future results. So this is called, and it is a setup we discussed in the Trader Lab. And you are invited if you're interested in any of this to visit. This is called the IB continuation trade. So what it is stop, pick, and then south. And this is an alignment with the higher time frame. So for me, no long. The only buying I have is covering shorts so far. Now that can change. So here's the setup. Chop. Now I'm going to open it up. Now this is an auction, and when I talk, about the volume profile and auction market theory, it takes place in all time frames and fractals. Okay, all time frames and fractals. So this chop can be as big as this and be a higher time frame consolidation, or it can be a couple of points wide. All I need, and Bookmap really helps me with this, is I need to see the location, alignment with the context, and then I'm looking for triggering structure. The stops for me, I call this a stop pick. Remember, get your stop picked? That's what I went, my stop just got picked off. Why? As a retail trader, and of course I'm only a retail trader after having a career in the industry, but the fact is, early on, the stops for me, I call this a stop, is I need to see the location, alignment with the context, and then I'm looking for triggering structure. The stops for me, I call this a stop pick. Remember, get your stop picked? That's what I went, my stop just got picked off. Why? As a retail trader, and of course I'm only a retail trader after having a career in the industry, but the fact is, early on when I was trading, I did what we all did, or do, and that is what everybody else does, and I started noticing that I would get my stops taken out, and then the trade would often go on. And I'd be thinking, well, why is that happening? Right? And this is many, many, many years ago when I started observing this. And I actually developed trading systems that were actually predicated on this behavior. So I carried that forward into the way I trade today, which is vastly different from what I used to do, which was system trading, swing trading, trend following, which was all we had back in the Stone Age. So here's the triggering behavior. First of all, I got to take this out. Now I'm looking for the short. And again, I don't know where. Except I know that the longs are off sides and we got a lot of range to come down and potentially fill the gap. So I know, and yesterday's high, which is sitting around 37.02-ish. So there's a lot of potential in this, right? So I know that the market's long. Remember, the market's long. We had responders sold who were long from yesterday, and then we had sellers initiate to sell into the gap, getting aligned with the higher time frame trend. So remember, put all these pieces together. So for me, it's shorts only, especially because of the range, and we're rolling down. So I hope that puts it back in perspective. So here I'm looking, and I don't know where. Remember. Now here is my IB. Remember. So I can't do anything here. You know, I'm still short. Breakdown up, and here's the short for the continuation or add, subject to your plan. So chop, chop, right here. 80 stops. Thanks for playing. This is your retail. Remember, it's us who use these stops. You know, Goldman Sachs, probably not so much. 80 buy stops. And you'll notice this liquidity coming in, right? 18 buy stops. Now, here's the key. Higher 6 buy stops. I call this, let's put it this way, stop divergence. Higher price, and who's getting, are these buyers or buy stops? So I can see, because Bookmap has this iceberg stop detector, and the reason we have it is because the CME tags their orders, and they share that and distribute that order tags. So a stop order is not a market order, and a limit order, you know, is not a stop or anything else. So they have to have tags on them. So those tags allow us to get the insight as far as what's going on here. Who are these guys? Buy stops. Now we come up to the same price, only 18. And here's the key. This is the trigger. Up here, now the liquidity is helpful, okay, but not necessary. 6. There's your exhaustion. Here's my micro structure. I'm going to open this up so you can kind of see what it looks like right here. Okay? And this is how I'm using Bookmap to kind of help me out. So you can see here 75, 4, 18, 5 into the liquidity. It's staying in the book, and it's an algo or a spoofer. It is really not that interested in trading, but here's what happens when this comes into the book. And Bruce does fantastic order flow streaming Monday, Tuesday, and Friday. And plus there's a tremendous amount of YouTube videos that explain and demonstrate all these different behaviors. And if you are using order flow, or you want to see how you might fit order flow into what you do, I would suggest to check them out. You know, take a weekend, hang out, and watch. So here's our trigger. So I'm looking, exhaustion. This is, now the trigger is set up. What do I need? I need it to break. Now, this high volume, now you're going to see something very familiar. Everything I discussed earlier was in a slightly higher time frame. I'm now in a micro structure. Right here, and this is something that once you get used to seeing it, it'll register. You know, like what we're doing now, it's going to look like another language. And frankly, it is a different language, because price on its own is, if you only see price without the volume at price, you have an incomplete picture. You may say, well, that's just chop. Well, to me, it's an auction, because the interaction between these buyers and sellers is telling me what they think. And inside of this consolidation is this volume right here. So in this interaction, this is retail for them. These guys. This is, again, your convenience store. When we break below it, that sets off the trigger. So here's the pieces. Location, right? Trend down. I think we can agree. Chop, chop. After picking the stops, see the pieces coming together? Potential exhaustion. And I say the word potential because we have no clue until it breaks. Now the trigger has fired. Now, how do you get into this? Potential exhaustion. And I say the word after picking the stops. See the pieces coming together? potential exhaustion. And I say the word potential because we have no clue until it breaks. Now the trigger has fired. Now, how do you get into this? This is your high volume. The market is saying potentially this is too high. So break, chop, trigger, pull back, short. So that's your entry. Your stop is either above this or above the high of this swing. You would be in this thing around 40. Your stop would be 42 half, 43. That's a 3-point risk, and that's our objective, what we do in the Trader Lab. Most of the time, using microstructure in the ES, we can get our risk around 3 points. Now there's a couple. Now let's look. You would be in this thing around 40. Your stop short. So that's your entry. Actually, this is too high. Now the trigger has fired. Now, how do you get into this? This is your high volume. The market is saying potentially this is too high. So break, chop, trigger, pull back, short. So that's your entry. Your stop is either above this or above the high of this swing. You would be in this thing around 40. Your stop would be 42 half, 43. Potentially, this is too high. So break, chop, trigger, pull back, short. So that's your entry. Your stop is either above this or below. Break, chop, trigger, pullback, short. So that's your entry. Your stop is either above this or above the high of this swing. You would be in this thing around 40. Your stop would be 42 half, 43. That's a 3-point risk, and that's our objective. What we do in the Trader Lab, most of the time using microstructure in the ES, we can get our risk around 3 points. Now there's a couple. Now let's look what happens next. So there's your short.
NQ, short midpoint reversal.
Whoa, let me
Short
get it back
midpoint
here.
reversal.
So I'm going to show you a couple of different things here. Now trade management, that's up to your trade plan. So let's take a look what happens here. So this is our IB continuation, and you can find this in the Trader Lab. Short. Now you manage your trade or whatever you do with it. Now let's watch the behavior when we come up. I'm just showing you behavior. There's two things that happen here. Now for me, if I take the IB continuation, then there's another possibility. First of all, I get this. This is all good. Now, if we come back, let's use the same process and thought process we used earlier. What's above the IB? Stops. We have a setup in the Trader Lab, and I don't like to use the term setup. Let's call them behaviors that we observe. And one of them is called what I call the IB failure, or IBF. And all it means is we fell out of the first hour, and now we come back. What's above here? Let's remember, stops retail trader behavior. So I do not take this again because I know there's stops above here. So what I need to do, the IBF is what's called a mean reversion trade. In other words, and in the down context, and this is subject to your trade plan, I don't get long. Under different context, this would be a long for what's called mean reversion, but not in this context, and it is subject to your trade plan. I have no opinion. You have to vet your trade plan. This is what we do in the Trader Lab. So here's the next level. Stops are here, and I'm going to show you something that you're going to find interesting. If I anticipate the squeeze, I don't know how far it's going to go, but I know the trend is down. So let's look right here, and it's right here. Well, what happens? I just got to take a look at something here on my other chart. Hold on a second. Because I want to show you why something happened. It's always, the fact that something happens is not as important as to why. 45, okay. The overnight volume point of control is here. This was the retail price in the ETH. We are below it. That is saying at the moment this is too high. Remember, this is for the whole ETH session. And it's similar to that yellow line I was showing you, except this was the high volume. Okay? If we're below it, potentially it's saying this is too high. Now, we can come up here. However, right here, does this look familiar? Chop, 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 micro high volume. Now you have to have some experience to see this. Now I'm not saying you need to. I'm just showing you what I do. And you can do if you vet it and understand the auction and what created this. Remember, squeeze. See? Why? The stop's above here. Let's go back to the thought. Context, down. If I come back in, it's mean reversion, but it's not a long. It's just a squeeze because of all the stops, of all the shorts. So here's the buy stop. See them, see them, see them, see them. And then what? Higher exhaustion, triggering structure, auction. Remember? Chop, chop, chop. So I'm looking here. And let me go back a little bit. I want to show you how this all comes together because I think you're going to see why I get passionate about this because I can understand what creates something. This here, right here, you see this chop chop? This is an auction. and we broke away from it. The high volume in this, now this happened before, right, is right here. I have these marked on my chart. That's called a high volume node. Now it's in a microstructure. This, remember, too high, break, pull back, potential short, neither here nor there. You can see there can be trades all over the place, but you have to be vetted. So this was too high at 47. So I don't know how far back it will come, remember, but I know stops are above here, so now I'm going to look for this squeeze. So I'm looking for the squeeze, and this is part of what we do in the Trader Lab. So let's go back. Where's the volume? 47. Where do we check? Now let's open it up. 47. Watch. And this is a short, and I posted this in the Trader Lab. Remember, I don't call trades. I just, mention things. So look. See, what's important about this is I'm coming back to a level that we rejected previously, the 47. That is what I'm leaning on. And I don't know what it'll do, so don't think I know anything. What I know is what it might do. And then I'm looking to see, is there a reaction here? And then, remember this was where the buy stops were? Well, what's under this? Sell stops. So if I can get short, this is my first target, and then hold because of the higher time frame context. So let's take a look at how this works. And then I'll look at your questions. I'm just trying to get us kind of so you get an idea of how you might use auction. Here's our exhaustion, chop, 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 break. So the high volume is right around 47. So right in here is a short. Let's see. You see this right here? This is your short. So chop, chop, break, pull back. This is your volume. You can see I have the alignment. Here you go. Bing, bang, boom. Too high. There's your volume. 47. Short. And then scale. Now let's watch this behavior. And then I'll take a look, okay? And thanks for your patience, but I don't multitask well, and I don't want to lose where I am, because I think it's really important that you kind of get to understand. So this was the scale. So 47, and I always leave some for the sweeper, so 42. That's a 5 point, okay? And I didn't get in 47, I'm not so good at this. For me, I'm in here. So scale, risk neutral. Remember, 3-point risk, right? I think it was, whatever it is. Let me go take a look. So from entry to this top of this swing, which is just a couple of points. Again, within that 3 point, and then I'm going for a 5 point, 4-point, 5-point scale, you see? So that gets me risk neutral. I can keep my stop above this swing high, so the market would have to come all the way back to take me out. So now I'm in the short area. I've got my position back on. Now, the volume point of control, remember, the highest volume in the developing day time frame drops down. That is supportive, saying that volume and price are moving together. This is bearish. So this is good for the short, okay? We're under this initial balance low. Remember the first hour low, so south of the border. Anyway, I think you kind of get the idea. Now I'll take a look at your questions, okay? So short, 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 short. Those are setups we discuss in the Trader Lab. And this was the yesterday's high. This is the gap. I also had set 37, I think it was 37.16. Where was it? I can't remember anymore. I think, yeah, 37.16 is a target on this trade. So I got out of this here. Right here, right on this.
Balance, caution, caution.
So that trade is over. And this was the yesterday's high. This is the gap. I also had set 37, I think it was 37.16. Where was it? I can't remember anymore. I think, yeah, 37.16 is a target on this trade. So I got out of this here. Right here, right on this.
Balance, caution, caution. Wait
So
for
that trade is
outside.
over.
Wait for outside.
And now I am visiting with you. So this was the
That's just
target.
resell
I mean, this could be the target also. This is a viable target, all this. But for me, that was okay for me. I just trade with targets.
252.
So where are we? There we are. Okay, now I can go take a look at questions. Okay, guys? Thanks for being patient too. No, Jim, there's no price to attend the Trader Lab. In fact, I want to invite everyone, if you find any value in this, that it's helpful, at least to understand how the market works, why it might do what it does, and how maybe with a better understanding of market behavior that you might be able to integrate your trade plan or develop a trade plan, you know, with whatever process you use that gives you, the desired outcome. The Trader Lab is really what it is a group of serious, career-minded traders looking to develop trading plans and a trading business. It's not a trade calling room, and it's open to everyone. You don't need to be a Bookmap subscriber. You won't be solicited. And it's really a great opportunity not only to visit the Trader Lab and take advantage of the examples of these behaviors. There's 60 PDFs you can download, which is available to everyone, and also a primer webinar I did for Bookmap, an advanced trader webinar I did last year on auction behavior and using the volume profile and aligning it with setups or behaviors, as I like to think of them, that you can kind of observe and study. And the other part of it is understanding what this business is. I think a lot of traders, we kind of operate under a rock, and we don't, we kind of go it alone, right? And there's so much information now out on the internet. What's useful, what isn't, what's nonsense and what's really usable. I think that's a real conundrum for us because you guys now have information overload. The Trader Lab is really leveraging off our collective behaviors. Many of us have gone down the same dead ends, and many of us have gone down other dead ends. Some of us, and many of us, have really good processes that can be valuable so we can all leverage and learn together. The purpose of the Trader Lab is to leverage our collective experience and improve. We all have the same issues, psychological and everything else. Now we want to watch this behavior right up here, not a trade recommendation. What's going to happen at the VWAP? This is VWAP and we have mid. What do retail traders do? Two things. They keep their stops at the mid and the VWAP. So we have something that we observe in the Trader Lab, and this is not a trade recommendation, and this has a alignment. This is the retail price up here that was too high. This is where buy stops. And remember, buy stops, what they can do is, since the collective behavior of traders, and I know I'm deviating a little bit here, but I want to point this out to you. There's going to be stops. Remember you used to keep your stop above the mid and the VWAP? Or you still do? I did. And guess what would happen to me? I got stopped out. I didn't like that. So I said, well, I figured out, and this is so many years ago when I started writing trading systems, that this would be an issue to take advantage of. In other words, I'm getting stopped out. How about I let somebody else get stopped out? And then I use the behavior after the exhaustion, which is what you're seeing me do on these triggers, now to get positioned. So the potential trade, and it's not a recommendation because we never know, is to come back here, squeeze, reverse, and come back here. And that's called the VWAP to VPOC. And you can see the range makes it potentially worthwhile. And remember, this is not a recommendation to trade it. Anything can happen, right? So we'll keep an eye on that one. Let me get back to your questions. So yeah, impetus, actually I do. So I apologize, okay? And if that bothers you, I understand, but I apologize. But yeah, I do have to do that. Because right now I'm pointing out a trade, and it's not a recommendation.
Short midpoint reversal.
So unfortunately, I do. So, and believe me, I'd rather spend my energy not doing it. So this is our next opportunity to observe. So why might we go there? It's because of retail behavior. Will we go there? No clue. However, if you want to think about how the market tends to operate, if we have stops, look at this, 1,000, buy stops, 1,000. Where are most of the stops? They're sitting up here. So the market has the potential to reach back up into those stops because that's fuel, you know. So as the market pushes higher, potentially we're going to light up more stops, which is, and because most of them are sitting up in this area, there's the potential to get back there or not. So no way to know.
Short 2P.
So that's where we are today. Now you can see that we filled the gap. So shorts, other than rotations, for me at the moment are pretty much done, though we still have the potential to get back into yesterday's range. So that's possible. So for me, this is my next area. So I'm in park at the moment because I don't, and here's my philosophy on it. It's just me, you know, you guys can always do whatever you want. This is, remember, I'm not a vendor and I don't sell a course or any of that. For me, I have to wait because if I, for example, depending on the configuration, this could be a short right here against this. However, if I know there's stops sitting above me, do I really want to join it here? Because if we come above here and then we're above this swing, then there's more potential for squeeze. And there's this swing over here and up here. So I have to look left and consider where these swings are. And if it doesn't matter. Because it's kind of like waiting for your bus. Now you can see what's going on here. Liquidity came in, liquidity got added. These guys are sitting here. If this pulls, it opens the door. That's kind of how order flow can help you. What I would like to see is see it come up here because that's in alignment, and then see some kind of behavior in the order flow to help me, you know, potentially trigger. It doesn't have to be there, and we never know the intent. I mean, these guys, so you know, could put this here, push this down, take the other side of the trade, flip it around, and then they take the lid off the pot, and then they release the pressure. So when you see this coming down, it's causing the bids to pull. And this, if this gets dark, it's like opening a door. So we don't know what the intent is of any of this because this is algorithmic behavior. So that's something, you know, that's always like the great mystery. So I kind of prioritize the behavior of the participants, and I call this my chassis, and then I have behaviors at locations, and that's what a setup is, right? And if it doesn't happen, it just doesn't matter. There's always another bus. So anyway, yeah, impetus, I hope that kind of answered your question on that thing, you know? Or was it James? I don't know. Prithvi, how do you read exhaustion? Okay, it's the stops. You know, we're here for one thing, and that's to get better. And we all get better. That's how we leverage our collective experience. Everybody is welcome. The only thing is required. Remember, it's not a trade calling room. And if you have an opinion, it needs to be, you need to share why. You know, and it's not about, you know, get long here, get short here. It's really more about here's what I'm looking at, here's why, and then we all kind of collectively, you know, get in there together. I also do narrate when I'm not streaming here on YouTube, and so it's an interactive environment, just so you know. So that's kind of what goes on in the Trader Lab, and you're all invited. Also, there's 60 PDFs you can download of these behaviors. You can study in a, call it a initial webinar I did. That'll kind of give you the short course, if you will, on auction market theory and the behaviors. Everything takes time. There's no shortcut, but if you keep it simple And I know when I started out, I thought complexity was the answer because I thought, well, I'm going to use all these indicators and stuff and I'm going to sort it out and I'm going to find what other people don't see. Well, I kind of, that didn't work because it's really a curve fit. But I didn't understand there was no literature at the time when I was doing these things. So I was very much in a vacuum. You guys have it a lot better, but then you have to sort out what works and doesn't work for you, right? So let's watch. Remember what we're looking for at the moment. So this is a retail price. The anticipation is if this is too high, we'll come back here. If we don't get here, then what do we have? This. So this is our next area to observe. So right around here, and I'm going to mark it. And I don't know if I'll be on the stream, but I recommend you guys mark this area, 3740-ish. You notice I use the term ish because everything has slop. And if we go into stops up here, it's going to create momentum. How many of you guys, okay, I got my stop above the mid. I'll put it 1 point. I'll put it 2. See, so all those stops can get lit up. So it's an area. So this is not mechanical. It's location oriented based on auction behaviors. That's kind of how all this comes together. So let's sit and hang out. Now let's look what happened here. They pressed. They have a lid here. Does this guy pull? The thing with liquidity is it's not necessarily real. This guy might have just put this here, and you notice he pulled there. This stayed in the book. If he pulls, it opens it up. So I don't look at these like support and resistance. And the reason I don't look at them that way is I don't know what they're going to do. So they're inconsistent in the sense of what's the intent. Was it just to skew the book and get these guys to pull? And now if he pulls, and then if they flip, does it push it up into these stops? And again, I don't know what it'll do. So he didn't pull. So I don't know. But I don't trade against this. I trade against this. And again, this is not a trade recommendation. Why? That. So let's see what happens. I hope you find this useful. Any other questions while we're hanging out? Well, Captain, this market is just another day in the jungle. I don't see them as any more dangerous than they always are, you know. However, the fact that we have range and outsized rotations, and it's just my trade plan, actually gives me more opportunity, which is why from here to here is the next opportunity. And remember, clueless, not a trade calling room, past performance, you know, impetus, right? Not indicative future results. So I do need to say that. And again, I know it's not, you know, I don't like saying it. But having been in the industry for many years on the professional side, you kind of get used to certain things because you understand, let's just say, the regulatory environment, and I do. So that's another reason why it's in here. So I hope you understand that. So let's watch. Now you're going to see microstructure all over the place, but the thing about it is it's not material unless it's aligned. So we are watching, remember, this is what having structured trade plan is about. It's not about dancing, you know, in the middle of nowhere. It's about understanding market behavior. So remember, what are we looking for, right? And every outcome of all of these is random. So let's see what happens here, okay? Now remember, the market can do anything. It can come up the mid VWAP, counter-rotate off, go south of the border, and get to this, which is a target, and then hold. The other part of this is it may not get there, or it may just tap it, and it'll never pick. That can happen too. And for me, I don't know. It's one of those things where it's a judgment call. I think potentially the better trade is to get the shorts out and exhaust than just step in front of the train because we know there's stops up here. This is that retail trader behavior. In fact, write this down. Think like a retail trader. don't act like one. It's really important. So now you see there's an auction going on in this consolidation. I cannot activate here because all it might give me is a little counter rotation. Where's the fuel? Here. That's why there's nothing for me to do. This is what vetted setups are about. And again, the best you got is maybe.